How's it going, everyone? My name is Keenan and welcome to my YouTube channel. Today I want to share with you the 5 things that helped me buy this property here at 25 years old in Hawaii. So number 1, and this is probably the most important step out of anything that I'm going to tell you today, but if you're trying to get into real estate, you need to save your money. If you're brand new to real estate, typically you're going to need 20% of the purchase price as a down payment for the home in order to buy the property. So 20% can add up to a lot of money, especially in Hawaii, where the median single family home sells for $800,000 and the median condominium sells for $440,000. 20% of each of those, $160,000 and $88,000. It's kind of a lot. There are options out there for you to put down less than 20% of the property, like VA loans for, I believe, the armed forces, where it allows you to put down nothing, and opportunities like this for first-time home buyers where you can put down less than 20%. So for this property, I was allowed to put down 10% as part of a first-time home buyer, but that came at a cost because I needed to pay mortgage insurance, and that is essentially the cost that you're supposed to pay your lender because you don't have enough of your own money tied up in the property. That equated to another $110 a month that I needed to pay that I didn't account for. So I would say shoot for 20% for your savings, and if an opportunity comes up where you can put down less, just make sure you understand the consequences of putting down less money up front and that it doesn't outweigh the benefit of the added 10% or whatever percent it is to get it to 20. So how do you save money? How do you get better at that? If you're not already tracking your expenses, that's the first place to start. For me, I have my own Excel file. You can use mint.com, which is essentially a free website that you just put in all of your bank data and it populates everything for you. I actually just realized I only had the app on my phone. I didn't realize they actually have a website on the on the computer. I feel old. On the computer. They have a web-based site where it's a lot more detailed, it's a lot more user-friendly, and it kind of gives you essentially what you want, and it shows you where you're spending your money. I think having that awareness is very important when you're trying to cut down on your spending. So try to put saving at the forefront of your mind. Think about it anytime you're basically pulling out your credit card or cash, and think about your end goal and where you really want to be. And I think the more you think about it and the more it becomes a part of your life and your mindset to save your money, you'll get there. So number 2, I was always working. So ever since I believe it was legal to do so, I had a job. So throughout high school, college, I always had either a job or an internship that was bringing me some sort of income, and I saved as much of that as I could. Now don't get me wrong, I wasn't perfect, and I made some interesting purchases throughout my 20s, I'll say. But having that consistent income was a big reason why I was able to put money down on a home so early in my 20s, when I was really only working for a couple years after I graduated from college. So starting work early also taught me the value of earning money and relating that to time spent. So for example, say if you worked a job where you're getting paid $15 an hour, and you want to go buy a plate lunch every day, right? So technically for you to buy a plate lunch, maybe it's like somewhere in that $10 to $15 range, you have to work an hour to do it. And that's kind of how I wired my brain when I first started earning income. And having that foundation so early really helped me later on when I was making a little bit more money. So I started to look at purchases in terms of hours worked, and that helped keep me from making spontaneous purchases down the line. So start work as early as you can and start building good habits. So number 3, I had good credit and I didn't really have any debt. Let's tackle credit first. So luckily my parents, or my mom, or I guess, my dad, shout out to both of them. They're both great. My mom really wanted me to get a credit card from an early age, and I didn't understand why. I felt like if I had a debit card that basically I didn't have any intention of spending more money than I was earning, so I thought, why wouldn't I just use this debit card instead of holding a balance on a credit card that I would then have to remember to pay off every single month. So the concept and the importance of it didn't really hit me until I graduated college and I started making money and I wanted to go buy a car and buy this place, and people were willing to lend me money at my age, big part of just because I had a great credit score. Basically your credit score tells the lender that you have a good history of managing your money, and you become a lower risk to them if you go with and since you are a lower risk, you'll probably get better rates and you'll be more likely to get the loan that you want. And that's what we all want, pay less money. So how do you get good credit? For me, all I did was I never went over my limits on my credit card, and I always paid it off in full at the end of every month. I didn't hold a balance after that month because the interest that you have to pay on that credit card doesn't make any sense to me. And I'm able to get a pretty good credit score, obviously, for me to buy a home at my age. And now debt kind of ties in with your credit score when the lender is looking at you as a candidate. I didn't have any. I was very lucky, and I realized I'm very, very blessed, and I can't stress this enough, how I understand that my situation is not the norm. Especially going to college, usually people come out of school with a lot of loans. So my deal with my parents was, since I couldn't get any money from the University of Washington, public out-of-state school, everybody knows you probably won't get money, but anyhow, the deal with them was that since I didn't get a scholarship, I should graduate in 3 years and save them the $40,000+, which I did. Which definitely helped with the debt situation, but I owe it all to my grandfather, who invested, was smart with his money, and helped set up a fund for me and my sister so that we could graduate from college debt-free. So if you do have student loan debt, my suggestion is to pay that off as soon as it makes sense for you to do so. I know there are some ways that student loans are set up where if you pay it off early, it doesn't really help you. So if you can use that money to invest or do something else with it, you can help it grow over time, and it's not affecting you overall throughout the lifetime of the loan, do it that way. And if you're just starting into college, do a quick analysis on how much money or loans you're going to take out at the end of college and how much money you're going to plan on getting with your career. A lot of times there's an imbalance there, and you're going to set yourself farther back so you can't take advantage of opportunities early in your life like I was able to. So try to take on as little debt as you can. A bachelor's degree is not worth what it used to back in our parents' days. So be smart about how much debt you put yourself into for the career that you're trying to get. Also, if you have too much debt for real estate, it probably goes against you, and the lender will probably be less likely to give you the loan. And these are things that I've only recently started to understand as I started to get into this real world of real estate and just financial understanding of life. So if there's any tips that you guys have, feel free to comment below, and even if you have anything from me, I'd love to learn from what your guys' experience were, or what tips you have for anybody else out in the world. And number 4, I think my camera's shaking. And number 4, have mentors. For me, I think it was very important to have people that were involved in real estate that could give me some good advice so that I could make better decisions later on. Without mentors, it's a little bit harder to gain the best information and know about all the opportunities that are actually out there. And even just in general for life, I always find that the best way to better yourself is surround yourself with people that are better than that thing than you are, so you can kind of leech onto them and improve. That's not a good way of saying that though, yeah. For me, my mom actually has a real estate license. She's never practiced, but she's always been involved in searching and researching about the different properties and opportunities that are coming up in the area, just for herself, but also for me. And she's the one that actually told me about this opportunity for me to buy the place that I live in today. And I also have older friends too that were able to give me some better advice on buying a new place, what good interest rates were, and how many points I should pay on the property. And those kinds of people in your life are so important when it's your first time starting out. So if you don't have anybody right now around you as a mentor, hopefully this channel can serve as kind of your mentor and kind of teach you about what kind of things to look for when you're starting to get into real estate. Or even people, so comment below, people in the comments, you guys can help each other too. And that's kind of what I want this to be, right? I want people to be able to come here, learn a little bit more and kind of everybody get better and improve together. So yeah, let's do that. But on the same note, I do think it's very important to have people that are in your specific area that can tell you a little bit more about the specifics of each region, because real estate is a location-based investment strategy. And number 5, seize the opportunity. In real estate, they say that timing is everything, and that was definitely the case for me. As a quick story, immediately after college, I was actually working in Nebraska, and then a few months later, I actually got another opportunity to come home to work in Hawaii. So within a couple weeks of moving home, I found out about the opportunity for this new building that I'm living in now. I needed to get all my paperwork in order by the end of that month, and I started immediately on getting prerequisited? No, that's not a word. I needed to get all my paperwork in by the end of the month, which included getting pre-qualified for the loan, gathering my funds for the down payment, and just submitting my application for the lottery for the building. And a few months later, my name was selected and I got to pick my unit. I've also heard of people that have found their properties the day that it comes out on the market, or even if they have inside information, days before. So in a lot of cases, if you're trying to find the right deal, you have to be ready. Paralysis of analysis is not what you want if you're trying to find a great deal in real estate. I think comfort in seizing opportunities stems from preparation. So that's where your foundation of saving, building your credit score, removing your debt, and all the things we just talked about come into play to get you that opportunity and make you feel ready. So what can you start doing immediately? Saving and working. I would start with those two and making sure that you're making enough money or an income that can allow you to make a down payment on a home, and saving most of it, living below your means and making sure that there's more money coming in than going out. And while you're working on these two, educating yourself about real estate and building that great foundation will let you be ready when the next opportunity comes for you to take advantage of it. Well, I hope you guys enjoyed the video. If you did, please hit the like button, subscribe, hit the notification bell. This is probably the most comfortable part of the video for me to say because it sounds very weird to me. So please do it for the uncomfortableness. The end.